Why have a stress test unless you're expecting a run on the banks? But I can't tell you how many people have said, I've taken my money out of the banks or out of a 401k and I'm putting it in precious metals because I don't trust the banks.
Worst day on Wall Street since the crash of 1987.
We're now down 43%.
This could be the most serious recession in decades.
Protect your retirement with a gold and silver IRA. Learn more at sdbullion.com/IRA. Tim, thank you so much for being here. Thank you for leaving your shop, driving all the way over to my studio and spending time with me.
Well, it's fun. I would miss it.
Thanks.
It's not like work.
It's that's good. You work too hard for this to be work for you. So I'm glad that it isn't. I was in the store today and did some videoing. Yep. A lot of people selling gold.
The people who are selling are doing so for a good reason. And it's good for me because then I don't have to place another order for things that people are looking for. And we bought a lot of gold today. Krugerrands, American Eagles, Maple Leafs, a few Buffaloes, and a lot of pre-33 gold.
We had a big price jump. We've talked about this. We did a video on it. Pro-Palestinian and pro-Hamas people didn't like it.
The people I've met from your community, and the nicest and smartest people,
Yep.
I'm a little surprised at that. I mean, because I told you where I draw the line, and I'm a little surprised at what I'm hearing from some of these demonstrations. I think it doesn't make a lot of sense to call Israelis Nazis. Before you leave college, try to get a little bit of education.
Yep.
Everything today is linked, and you know, people, unless you're my age, you probably don't remember the 1987 crash. It was a stock market crash. It was pretty severe. But in 1987, there were no hedge funds. Glass-Steagall was still in effect. The individual investor was king. And what happened in 1987, it was individual investors who were losing confidence in the markets. It started on Thursday, a Thursday afternoon. The markets took a big drop. And I remember I was with IBM. We used to go out after work and have a few beers, and we're all talking about that because everybody had some stocks, which is the way it used to be. Everybody invested in stocks. Nobody took flyers on, you know, there were no cryptocurrencies or anything else like that. And, you know, I asked the question, I said, who is going to sell out tomorrow and who is going to stay out, you know, stay in the market and weather it out. And the oldest guy said, oh, I'm definitely going to sell out tomorrow morning because I can always buy those stocks back at a lower price. And I felt the same way because I had all good stocks. And Friday was a disaster, and the bottom fell out of the market again. And so I said, well, I have one last opportunity, and that's Monday, which they now call Black Monday. Because the bottom really fell out of the market on Monday. The fact that it is a totally different definition of the financial markets, of the financial structure of the country back then. Today, hedge funds are king, and the individual investor means absolutely nothing. They don't care if you're Warren Buffett. They're not interested in your money. The individual investor has to kind of go with the flow. And what we saw about a month ago was the dollar index was going up every day and the metals were going down. I just took one afternoon, I took a look to see what was being shorted, and it was the euro. The euros were being dumped in the Atlantic Ocean because the dollar index is 58% euro. So if you want the dollar index to go up, dump euros. And the only thing I can interpret from that is that central banks, including the ECB, were buying gold, and the billionaires who control the markets were buying gold. So the best way to do that is to press gold. So you get it down to a place where you can set yourself up for another short. And the way the market went, and you could just, you know, it's like a wave on the beach, you know, down and up, came up, We had to go right back to where it was and a little higher, which puts it in a good position to short again. So I'm not saying that's going to happen. I'm saying if there's any pattern at all, that would fit into the pattern. So, we went back to a place much higher than where it was before. It was in the high 19s, we dropped down to the mid 18s, and then now it's back up to the high 19s. So it could be setting up for another short because they have no other way of making any money. How do hedge funds make money except shorting things that shouldn't be shorted? And of course, Dodd-Frank banned naked shorts. And what are all these shorts? Well, they're all naked shorts.
Right.
They're all naked shorts. Yeah.
There's nothing behind them.
So I guess Dodd-Frank banned naked shorts for us, the little guys, but not the big guys. But the other thing about the structure of the financial markets, it doesn't matter if it's Goldman Sachs, Morgan Stanley, JP Morgan, BlackRock, Vanguard, the rest of them, the whole group of them, they're all interchangeable. And you can add to that the regulatory agencies that we found out with Sam Bankman-Fried. SEC, FINRA, the CFTC, they're all the same people. And people used to say, well, how did Bernie Madoff get away with this for 12 years? They're all the same people. They're all the same club. The other thing that happened that most people aren't aware of, 1987 crash, a piece of legislation called Glass-Steagall was still in effect. And then Bill Clinton got elected, largely with funds from Wall Street. And, of course, Bill Clinton and Hillary Clinton, they're not corrupt or anything. I'm not implying that. But Bill Clinton had Glass-Steagall repealed. What was Glass-Steagall? Well, it prevented investment houses from having anything to do with commercial banking. It created a wall of separation because in 1932, 1933, the banks started collapsing because it was a run on the bank. Mm-hmm. And people should understand what a run on the bank is. It's when you go to the bank and you take all your money out of the bank and refuse to get a check from the bank for that money. You want the cash. And there's a lot going on about that. Last August, there was a Senate hearing. Jerome Powell was he's the key speaker, the keynote speaker. And it starts off with Elizabeth Warren, dumping all over Jerome Powell, and he just sits there and takes it and doesn't say anything. Then when she's, had her speech, the next thing they say, okay, let's take a look at the stress tests. Okay, and I'm not sure exactly what the timing is, but they printed a whole year's supply of cash, and I think it was May. They spent all of June distributing that cash to key banks. In July, they held a stress test for key banks. And in August, they told the Senate that the key banks passed the stress test with flying colors. Okay. And they had the numbers on the Jumbotron. They had Elizabeth Warren was just speaking, standing up and speaking without even a microphone. Well, why have a stress test unless you're expecting a run on the banks? That was kind of my question. That was my first reaction to that. And if I can judge by the people who are calling my store and placing orders, I can't tell you how many people have said, I've taken my money out of the banks or out of a 401k or out of an IRA, and I'm putting it in precious metals because I don't trust the banks. But that's the way the financial markets are today. And it doesn't matter if they're buying and selling cryptocurrencies or they're hedge fund customers or the only ones they take care of. But the way it works, I guess, is if you win the bet, you put the money in your pocket. If you're a hedge fund, if you lose the bet, you raid the capital reserves of the nearest commercial bank, and then that bank calls up the Fed and gets more money. So it's a rigged system. There's no question it's a rigged system. But all these people, it doesn't matter if it's the economic advisors to the president or the regulatory agencies, they're all the same. They're all interchangeable. And that's not good because there's an end game.
There is.
And the end game is not pretty.
So this is from the Wall Street Journal yesterday. It says the economy is great. Why are Americans in such a rotten mood?
It doesn't say Americans. It says Yankee and Tim in such a rotten mood. It's very strange because the economy is not great. Not only are they lying about everything, but every index they use to make a point is a phony index.
The misery index, late 70s. It was a combination of unemployment and inflation. A very simple formula, right?
It was very simple, but those are the two easiest to debunk. I'm assuming that everybody in the Yankee community understands that inflation does not include energy or food.
Yes, that's a very
Now, let's see, where's most of the inflation? Energy and food. That's kind of a coincidence. They don't count energy and food in their inflation numbers. That's why they say, oh, inflation's only 3%.
When the misery index was in play, they calculated inflation much different than they do now. They added all kinds of crazy machinations like hedonics and substitution and all these different things than what it was back in the 80s. Right?
I want you to look at the unemployment figures.
Let's look at the unemployment figures. So again, they don't calculate it the way they did back during the misery index, during the 70s and 80s, where they took out long-term discouraged workers from the calculation. So if it's long enough and you haven't found a job and you're discouraged, you're taking off that stat.
That's right.
And now, if you look at the unemployment as if it was calculated back then when the misery index came out, it's around 25% unemployment. Not the numbers that they're giving. They're saying that the unemployment is like 3.8%. So they're touting a 7.5% misery index, which they say is really, really low. I mean, that's so low compared to what it was back then. No, it should be like 37%.
Yeah, somewhere in that neighborhood.
Yeah.
You know, the unfortunate thing is if your unemployment benefits expire, they assume you're either died or you have a job, and they're assuming now that you have it. That's a brand new job. Or if you sell something on eBay, oh, that's a new job. They stretch anything they can to make that number look good, and it's a total lie.
Look at this. They say GDP, yeah, it's up around 7. Payroll up. Median weekly wage up. But look at the consumer sentiment, way down. The Keynesian economists, the mainstream media, this administration, they're clueless. They don't get why everybody is so ticked off and angry with the way our economy is functioning right now.
Well, the people who don't understand anything are academics. Okay, they're in some business school in some college, probably some Ivy League college, you know, along the Charles. And
Charles River in Boston.
They don't understand anything that's real because they don't live in the real world. And their view of the economy is very different from everybody else's. And but their view of politics is different from everyone else's. Their view of war and pestilence and apocalypse is different from everybody else's.
It sure is.